What's up, everybody? It's Guy Costin, founder of Dakota. I'm joined by Tim Dolan. Excuse me. He's one of our vice president of institutional sales. And so it's our first episode of the Emerging Manager Growth Show. So Tim, the whole goal that we get a lot of questions all the time from emerging managers, and we love to answer them. It's all about distribution questions. What should I be doing? What should I be doing to grow? And there's a lot of myths out there. And so we thought, you know what? Let's create a monthly show, okay? And we'll just talk about distribution, okay? And we'll talk about distribution ideas, what's working, what's not working, the things that we do. And as you're going to see, for those of you who don't know us as an organization, we're Dakota. And what we do is our core business is fundraising on a third-party basis for about 5 investment firms. And we are very process-driven. And Tim's been with the firm since 2011. We started in 2006. We've raised over $30 billion. But it's all about process. That's really the deal. Everything that we do is about process. And there's a lot of nuance to fundraising. And this is going to be the structure of this show. We're going to do it once a month. And it's really targeted for the emerging managers who are looking for new ideas. They're looking for a process. They're looking to see what's worked. And what we're going to do is we're going to pick one channel per month to go deep on to expose an emerging manager to. And so you can kind of see where the opportunities lie. We've picked our favorite one, and it's the most obvious to start with, which is the RA channel. So we're going to spend the next 10 to 15 minutes doing a really deep dive into the RA channel. We're going to end with some of the accounts that you should be calling on that we know utilize emerging managers, but we're really going to demystify the channel. And so why don't you just kick it off for everyone? Because listen, if you're on the show right now and you're super experienced, which you might have come on, a lot of this stuff you might already know, but we're going to cover it in detail. So, for those who are just trying to learn, what is this distribution channel? How do I attack it? So Tim, give us a breakdown of the RA channel.
Yeah, perfect. Thanks, Guy. So just to start, RA channel, registered investment advisors, approximately 32,000 registered with the SEC. And if you really break that down, that's a lot, right? And if you're a new manager, it's how do I cover all of those? So what we do here at Dakota is really focus on what matters most, and that is the subset of RAs that actually use outside managers in their asset allocation program.
Right.
So within the 32,000, we have discovered about 2,500, right, that use long-only equity, fixed income, alternatives, hedge funds within their program to make portfolios on behalf of their clients. That's where we focus our efforts. It can be overwhelming to try to figure out those 30,000. There's really 2,500 that truly matter.
Right, and so one thing in our introduction I failed to mention, because we have a lot of members on this call, is that we also 4 years ago started a database business called Dakota Marketplace. We'll reference it a little bit later when we're giving some advice on how to attack different metro areas. But within Dakota Marketplace, we have 2,001 right now qualified RAs that use outside managers that you would want to be calling on.
Yep.
So, and that's a big component of our business. We eat our own cooking. We use the database every single day. It's very, very useful, and we make it very easy to have you do outreach using Dakota Marketplace.
I think another important component of the RAA channel is some folks consider it retail. It's as institutional as it can get. CFA level analysts, due diligence teams, right, that are looking for strategies and unique ideas like a lot of what our listeners have for their products right now. The important thing about the RA channel is it is time consuming. You need a dedicated effort to the RAs. They're truly independent and there are no leverage points. What I mean by that is when you call JP Morgan, you're calling on one dedicated team, they pick your strategy and they distill it down to all of their advisors. The RAs, they're all independent. You have to be calling all of them at least 3 months, going to see them, and we'll talk about city scheduling and how we cover them on a daily basis.
So Tim, I did just get a question. Should I be on iCapital or Case?
Yep.
Right, and that's your thoughts on that and where the direction of the business is going. And maybe why don't I just give a little bit of a note, because I think this will be important. iCapital has roughly $135 billion on their platform. Case has about 12 to 15 billion. So you can kind of see the differences. Their technologies are a little bit different, but the RAs are using one or both platforms.
So what this question is geared toward specifically are what are called TAMPs, or turnkey asset management programs. On the alternative side, you have Case and iCapital. So how do RAs, right, leverage their time and efforts on behalf of their clients? Their clients want access to unique alternative strategies. Not all of them are qualified purchasers. Some of them are just high net worth individuals or individuals, but they want unique alternatives in their portfolios. That's what a Case&I Capital can provide. Expect, if you are marketing an alternative strategy to the RA space, expect to hear those two names of Case&I Capital in your conversation. They will continue to grow and continue to have a presence.
I did just get a question on what do we consider an emerging manager? Basically anything under $2 billion. We work with a lot of firms that are on our database that are members of our platform that are 100 million, 200 million, 300 million. Clearly, that would be an emerging manager. So it's kind of anything under $2 billion, especially as we start in the successive shows. We're going to talk about the different emerging manager programs and then what they deem to be a true emerging manager. But generally, we define it under $2 billion, but clearly between 100 million and 500 million would be maybe what the target for this conversation is as we go through. Now, we've started with emerging managers, right? Edgewood Management had 25 million in their mutual fund, right? Got up to 35 billion, it's come down, but we've worked with a lot of small firms, and these are all the tactics that we've put into place to successfully grow those firms. And the theme that we really are going to keep hitting on this show is you got to figure out how to do more with less and be really efficient with your time. And what we're trying to do is demystify these conversations. And by the way, I've already gotten some questions. It's on the right-hand side of the screen, as you can see, if you want to ask questions.
Yeah. So one question for you, Guy, is, all right, I'm calling on the RAs. How do they access my strategy, right? So talk about vehicles. How should my strategy be made available? And then do they come direct to us as a firm, or is there a custodian that I need to be working with?
So a lot of people, again, if you're a very experienced fundraiser, a lot of this information, this is targeted and really helping the emerging managers who might not know a lot of this stuff. So first off, Schwab and Fidelity and Pershing are the key custodians. And you don't necessarily have to be on that platform to make sales calls to RAs. However, for them to make an investment, you have to be on one of those platforms, your mutual fund or your separate account. Absolutely critical. Now, iCapital is acting in the capacity of that for alternative firms, whether it's open-ended credit fund or private equity, private real estate, et cetera. So yes, at some point you have to be on the platforms to get access. That being said, don't expect Schwab, Fidelity, or Pershing to give you 1 ounce of distribution help.
Yeah.
It's 100% on you. We do it ourselves to do the outreach to the RAs.
So we get this question a lot on the traditional long-only side. We have institutional caliber manager, separate account, doesn't have a mutual fund, thinking about launching a mutual fund or not.
Or an active ETF.
Or an active ETF, yes. How should I seed it with our own capital? Are there RAs out there that could help seed it? What are your thoughts around that?
Yeah, I mean, we've always taken the approach that the RAs are the first place you can go if you have a small mutual fund. So what we've always tried to do, if this question comes up a lot, should I launch a mutual fund or today an active ETF? The way that you do it is you get out in front of and do 10, 20, 30, 40 calls with RAs in the city scheduling program that we're going to profile later. What you want to be able to do is get enough interest from those RAs that then they look at you and say, listen, I would invest if you had a mutual fund or an actively managed ETF. So that's how we've always done it. We did that with Hamlin. It was 2 years in the marketplace with our separate account. Now, separate accounts are a lot easier to invest in, and a lot of RAs like separate accounts. So by no means do you only need a mutual fund or actively managed ETF. You can, if you have separate accounts, you can do that as well. But we used that strategy. It was very successful. We drew up over 2 years of groundswell support. We actually raised a bunch of money in separate accounts, then launched the mutual fund, and then everyone started using the mutual fund and our separate accounts, and that's how we grew it.
Yeah, perfect. All right, couple myths about the RAs. We get this question a lot. How long does it take to raise money in the RA space? I don't know if I can answer. So we focus it more on the due diligence process for an analyst is anywhere from 25 to 40 hours, right? So if you split that across the number of strategies they're looking at, anywhere from 9 months to 3 years. Expectation-wise, what we put on ourselves with any new strategy is within year 1 to 2 RAs to help bring your strategy's asset base from 0 to 25 to 30 million. Year 2 to 3, year 3 to 4, and then you're off and running. So it does take time, but what's great is the RA space and the emerging manager programs we'll talk about on subsequent calls, the RIA space is really the only place you can go for that early capital at a full fee, which is nice.
Right. And so let's just talk about setting expectations. We all have bosses, we all have PMs, we all have CEOs. Their opinion of what we should be raising is here. We might know realities here. So it's very important when you're selling to RIAs to have number one, consistency of outreach. Very important. Daily, weekly, very consistent. You really can't, quote unquote, raise money in the RAs. What you can successfully do, and this is what success should look like in your sales plan as you sit down with your boss, right? We always do this. We're religious about it. You have to set proper expectations, and you should target, say, listen, I'm going to cover the top 15 cities, and I'm going to go book out days in those cities. We're going to talk about how we do that. It's all about account coverage. What you end up doing is when you cover the account, you're going to determine interest, and that's how you're going to generate the pipeline. And then they're going to eventually tell you if they like the strategy, your allocation.
Yep.
So I would just make sure that you set expectations properly with your boss. It's really, really important with regard to the RA channel, and it's really important that you're just covering the accounts on a very consistent basis. It can't be episodic. It has to be consistent.
So we get this question a good amount is what size RAs should we be focused on, right? So at Dakota, we don't judge by size. We love all RAs, 100 million, a billion, 30 billion, right? We want to and get in front of all of them. One of the important things about being a newer manager or a smaller manager is working with some of the smaller RAs, maybe 200 to 500, 600 million, getting in their asset allocation program early on. What we're seeing now, and I'm sure you all see it in the news every day, is this RA M&A. This
Right.
activity of Wealth Enhancement Group buying, Cerity buying, Crescent acquiring, right? It's not going to stop. What we love is when you are embedded with these smaller RAs and they get acquired by these larger firms where we might not have a call in, they take your strategy with you. And so you now have a relationship. Maybe you might not have one with a Cerity of the world, right? Now you have a call in to Cerity. So we don't just focus on a billion and above, because what we're seeing, that theme of that M&A within the RA space, calling those smaller RAs has been very good for forming new relationships.
Oh, it's been unbelievable. I would strongly encourage you to really, because if you do it the way we're going to recommend, which is city by city, you're going to want to hit those smaller RAs to go see them, because you're better off going and seeing a $250 million RAA versus sitting in a Starbucks by yourself, right? Go see the investors, and they are not being called on, right, for the reasons we all said. Everyone likes to call in a billion and above. They're not called on as much, but they're very fertile ground. They love new ideas, and you can form a relationship. So, and also fundraising momentum is very important. So even if you can get $1 million allocation, 2 million, 5 million from a smaller RAA, it's really, really important. So I wouldn't judge too much by size, because you're going city by city, and you're going to want to cover and hit all of them in that particular city.
Yeah. All right, so this is the fun part, and I'm sure everybody on the call wants to know. All right, you gave me all this information. Who are some of the RAs and these early adopters? Who should I be calling on? So again, as Guy talked about, we do have a database called Dakota Marketplace. All of this information is within Marketplace with the appropriate contact information per asset class. So I broke this out in a couple different ways, much like we do on Dakota Live in a metro area. This is specific to RAs, and I'm going to touch on the RA aggregators. I talked about Wealth Enhancement Group and Cerity, Dynasty, Focus Financials, names that we see in the news on a daily basis. And so what this means is, should I be calling on Dynasty from a home office standpoint? Absolutely. But at the same time is working with those individual RA teams, if you will, within that Dynasty network. So Dynasty, Focus, Hightower Advisors, Sanctuary Advisors growing, First Republic, Rockefeller, all examples of RA aggregators where you're working the home office, making your strategy known and aware to them, but at the same time calling on those underlying advisor or RA teams within those RA aggregators. They can be your source of influence and help press on home office to get your strategy available. Early adopters, what we have found in our experience are a handful here: Ballantine in Boston, William Blair in Chicago, you have BDO Wealth in Baltimore, Crescent Wealth, they're growing through acquisitions, but definitely looking at emerging managers. Wealthgate and BSW out in Denver. In Detroit, you have GEM and MFO. Riverwater Partners in Milwaukee. Pitcairn here locally in Philadelphia. We've had RJ on Dakota Live talk about their platform. And then out in San Francisco, you have Columbia Pacific as a few examples of RAs that look at emerging managers.
Yeah, it's great, Tim. And so the RA channel, like we said, is really fertile ground. So we just got a question about, do you need to report? What's your thoughts on the importance of reporting to RAs if you're in illiquid strategies like private equity, private real estate, private credit? So, of course, I mean, our number one thing, as you're going to see when we get into the table stakes information of what you should be doing, which is almost free, is the level of communication that you should be having as an emerging manager should be extreme. And we can go through it when we go through our quarterly webinar, sort of plan of attack. But reporting and communication in good times and in bad is so important, and being transparent. And it doesn't matter what the product is, whether it's liquid, illiquid, reporting each quarter, and also even inter-quarter.
This is an interesting question because the RA space is the intermediary channel, right? The RAs are acting on behalf of some other entity, in most cases, high net worth individuals. So their phone is ringing in good times and bad. They need to be fed information on your strategy. When you're calling on an institution, i.e. the directs, you're directly selling to that entity. The intermediary space, they need to know what's going on. So when you talk about reporting, the more transparent you can be, the more information, you're not going to overwhelm them. I can promise you that. They need to know what's going on because their clients are calling and asking them.
100%. So that really concludes, Tim. I answered the questions, our fundraising roundup. Now what we're going to do is we're going to get into what I consider to be the table stakes things that you should be doing as a salesperson, right, and an emerging manager, because there's some very important goals, okay? And the problem that emerging managers have is you have a lack of resources, right? You have a lack of brand awareness, you have a lack of track record, lack of AUM, right? Not a super good recipe. And really what you need to be able to do is you need to be able to do more with less. And that's what we're going to talk about. You might hear this a lot from us, but Tim, when you talk about our sort of philosophy of sales, right? We hear this line all the time about shortcuts. Like everyone's looking for a shortcut, and I hear it all the time. Speed dating, connect here, do all of that, right? AI, we've just never seen that work, right? Fundraising is a very serious game. It's a very face-to-face contact sport, right? You have to be in front of people, and you have to be doing meetings. And then you have to find a way, as a young manager or emerging manager, you got to find ways to get leverage, okay? And that's what we're going to talk about, and that's why we're here, to help. And what our goal is with this show is just to make sure, even if you dial in and you get one tidbit of information that's helpful, then we think it's a win. We just want to make sure we're providing a venue to ask questions and then telling you exactly what we do on a daily basis, like I said, that we think are table stakes for any emerging manager. And trust me, you will get return out of these activities. Now, as we spoke before, a sales plan is very, very important because of career longevity, right? What ends up happening, Tim, what's the typical, if you don't set proper expectations with a plan of attack,
you get caught off guard, right? And you get the phone calls of where do we stand here, or where's the money? Why haven't we raised money faster? It's all about, the sales plan is all about managing expectations up front, not in the past.
It's really not about a sales plan. Yeah. It's really like career protection, right? Because you're going to write down and you're going to someone agree, like, did we agree? This is what I'm going to do every single day. This is what's going to go, and I'm going to report to you, right? And that's really why it's so critical. And a lot of people like to be a little dismissive of this, because I've done a lot of Rainmaker sales classes and the whole thing, and the one thing people are really not into is the sales plan. But I'm always going to include it because I think it gives you the best career protection that you can possibly get. We'll send you the samples after this, but it's really sitting down and like, where are you going to go spend your time and energy, and then defining for them what success looks like. And I'm going to tell you, success doesn't look like raising money. Success looks like covering the channel that's the best fit channel, and then coming back with feedback and a pipeline from that channel that eventually will result in raising money. Yep. But this is my favorite thing because all of us are a community of fundraisers. It's a really hard job, right, for all of us. Even software sales, very hard, right? You got investment sales, very hard. And you want to be the dog, not the tail. The sales plan makes you the dog. The reporting against the sales plan makes you the dog, and you don't get whipped around. So it's really, really critical. So we'll send this out. Now, my super favorite topic, Tim, let's talk. We talked a little city scheduling, but this is how you win in sales, and it's the consistency.
So what Gia talked about, do more with less. City scheduling, AKA, is efficiency and a good use of time in terms of how do I cover a massive universe, right?
Yeah, where do you start?
Where do I start?
Yeah,
so
what do I do?
Tim, you said there's 2,500 RAs. I'm one person. How do I cover all that? We use the excuse of travel, AKA city scheduling, where we have every single day, I wake up, I have 5 cities on the calendar that I'm currently scheduling for, right? As an example, Boston. Boston's 3 weeks out. We write down on a piece of paper 9, 11, 1, 3, and 4:30. We go into our database in Marketplace, and we start reaching out to the appropriate accounts, the RAs for emerging managers, emerging manager programs, consultants, right? Those that are fit for our product today. And we introduce ourselves, and we'll talk about the right emails and phone calls to get a meeting. But we start building out that day. We get 5 meetings, we're getting on a plane, we're going, right? The face-to-face interaction is crucial, especially in the early days, because they don't know you and they need to get to know you, right?
City scheduling gives you purpose, right? And listen, a lot of you on this call would say, yeah, of course. But a lot of times it's like, hey, your PM calls and says, I'm going to be in Boston visiting a couple companies. Can you get me a couple meetings? Right? What we have done is said, listen, this is going to be table stakes for how we run the business. Every time a salesperson walks in the door at Dakota, they need to have purpose and not thinking, hey, maybe I should travel now. You always have to have 5 cities. When one city rolls off, you add the next city, and you go through in its entirety doing your meeting request emails. It's absolutely vital. And this becomes a game changer for your business, but you have to do it consistently every single day. And you want to be sending at least 25 emails a day. And like I said, fundraising, right? This is why fundraising is hard, right? Because it's a very manual process, but you have to just embrace the difficulty. Like they say, at Penn State lacrosse, you got to embrace the suck. It's like you got to embrace it, right? Because it's tough, it's hard, but you're going to get such results if you consistently apply this.
And this is important, right? You get the 5 meetings, you're getting on the plane, you're going. You get 2, you flip them easily to a Zoom call.
Very important.
Very important. Yeah. And even throughout the last 2.5 years where travel was limited, we did not stop this process. Again, it's not travel that is the point of this. It's account coverage, and as Guy said, purpose. How do I cover all of the accounts within my territory, my region, under my name, whatever it is, however you split up the coverage, how do I cover them? And we use the excuse of, I'm going to be in town, can you meet?
And what we've done in Dakota Marketplace is we have solved the hardest problem, right? Which is, who should I call in Boston, right? That's why Dakota Marketplace is such a fantastic tool, because you don't have to think about who you should call on. It's right there in the metro area. You click on it, and then you start firing off your emails, which is a good segue. All right, I got a few questions coming in here. Tim, you want to talk about the email?
Yeah, so, all right, you've got the 5 cities listed out. You start finding the accounts, the right contact. What is the email? The most important thing, right, is because these analysts are getting hundreds and hundreds of emails on a daily basis, and Guillaume talks about this, we live and die by the subject line.
Yes.
Your subject line needs to hit them in the face of, what do you want? Meeting request, September 12th at 1 p.m. So when they open the email, they know somebody is asking to meet with me. Got it. And then within the email, on the next slide is, as we always talk about, hit them in the face, punch them in the face. What do you do? Tell me what you do very quickly and the purpose of your email.
Tim, this is where you have to spend a lot of time and be very thoughtful. No paragraphs, no multiple paragraphs. We probably, even in this example,
So
to do
it's
2
too long.
paragraphs. It's probably too long.
Too
I'm
long.
teasing.
Yeah.
But it has to be. But in this one, I just wanted to point out that if you're traveling with a PM, use that as the hook, and then get right to the point, so the person knows exactly, like, is this meeting worth my time? And it has to read very succinctly. It has to be very tight, but it's got to pack the punch of your value proposition. Get right to the point. Tell them what you're trying to do. And remember, this is about a meeting request email. This isn't like follow-up and other stuff. This is, your goal is just to get the meeting, and then You close it with my favorite thing. Now, you can do that, or you can suggest 1, 3, or 4:30. You could suggest a couple times, or if you're going to be there for 2 days, you could suggest that. The thing you don't want to do is say, hey, can you meet next week? Right? You need to be very, very specific in your call to action. Great. So as we're moving on, I just want to, whoops. So we're going to talk about messaging, but I do have a few questions, and they're very good ones, and I just want to get to them. So, okay, how many salespeople, fundraisers, do you think you need to hire to launch a new fund to properly cover key metros? Love a strong sales plan. Okay, good. So here's the deal. One person can cover a lot of ground. Okay, and I'm going to show you when we get into follow-up and using your CRM to get leverage. What we believe in very strongly is that if you manage your affairs as a salesperson, a one-person salesperson, as a business, and you use certain technologies that are very easy, meaning a CRM, Salesforce, or others, but you use it, you can create extreme leverage, and you can go from a 1x salesperson to a 5x to a 10x if you do it properly. So I don't think you need a lot of people. What you need focus. You need the salesperson to have a really good game plan, okay? And they need a really good list, again, Dakota Marketplace, a really good list of qualified buyers, and then they need a plan for city scheduling. If you just do those two things, as you can see, it's relatively simple, right? But it's hard, right? And it's focus, it's discipline, but we've solved the big problem, which is the qualified leads, and then we've given the plan of attack, which is city scheduling consistently, always having 5 cities on, always to be sending emails, and then ignoring the emotion when you're not getting responses. Ignore. I mean, basically, you're going to send 25 emails and maybe get 3 responses, 2 responses, 1 response, but you can't stop just because you're not getting responses. The people on the other side of the line, what we have found, are busy, have families, have other priorities, are doing other things. They just need to consistently hear from you, because eventually they're going to be like, I've seen all your emails. Now I do want to take this meeting because now's the right time.
I think specific to this question, where hiring multiple salespeople might seem like the right move, where salespeople get caught up and where they are inefficient is doing non-sales related activities, such as admin type roles, filling out RFPs, DDQs, right? Updating databases with performance numbers. You want your sales individual out there meeting with folks, positioning their product, following up, telling the story, talking about the strategy, where more admin, sales support, that's a different role. If you combine those two, that's where you're going to expect your salesperson to do a lot more than what he or she might be able to do.
Great. And so I just want to answer a few of these questions. They're really good ones. Good one. So this popped in. So, yes, should you make phone calls? 100%. Send the email, follow up with a voicemail or a phone call. Only one voicemail though, and you can send a couple of emails, right?
Yeah.
But great discipline to always make the phone call 100%. I love that question.
This is an absolute yes, especially because of what took place over the past 2.5 years. Office phones are now forwarded to cell phones. So phones are being picked up more, and we don't have to deal with the secretary saying they're not in the office.
Right, and most people don't do it. So, you don't have a lot of competition, which is great.
We do get asked, should I make a phone call or an email first, vice versa? I don't think there's any secret sauce. It's just you send the email, follow up a day or 2 days later. I like sending the email and then referencing it on the phone call. Hey, Tim from Edgewood, shot you a note. I'm going to be in town on the 14th. That's how I like
And the question just came in is how many follow-ups should you do? So you can take the email that you sent and forward it, right? And the second time, say, hey, just didn't know if you saw this. Can you meet Thursday at 1?
Yeah.
So I think 2 follow-ups without being too overly aggressive. You know what I mean?
The one voicemail is crucial, though.
Okay. What should you include in a standard update email to get an allocator's attention? Okay. I love this question because this is the difference maker, okay? And it's a difference maker because don't assume that buyer actually knows what's going on in your business life. That's what a lot of people do. They assume. I'll give you one example. A mutual fund needed to be of a certain size. As you start to hit certain thresholds that you know will be important to that allocator, send a 1-sentence update on something that's important. Don't make it frivolous. Make sure it's important, something that's developed. Or if you did a meeting with them and then something happened in your portfolio, right, that was positive or was illustrative of what you were talking about your investment strategy, send that. Hey, I don't know if you saw it, but I know Alan talked about Nike about this, and this just came up, and this is what they said. It validated the research work that they did.
Yeah.
Doing little things like that and little updates like that, I think, are vital. And if you make them short and sweet but pack a lot of punch, people appreciate that because then it's like a little news bite.
The intra-quarter updates are always tough, right? But what analysts want to know and people that we're calling on is what are their peers doing, right? What are their peers asking? We always reference, hey, we just got this question from another client. I thought you'd be interested in hearing how we answered it. And we lay it out right there for them. They're like, oh, I didn't even think about that. Thanks for sending. Or they don't respond. Maybe it's not a priority right now. But referencing other conversations with their peers seems to be a way to engage with folks.
Yes. We just got a question on compensation on how should you do it. I think you should base it upon AUM and a percentage of AUM, and here's why. You not only want the person to go out, the salesperson, and get the business, but you want them to service the business. And you want them to be ridiculously motivated to do both. And if they're being paid, they're going to be really motivated to communicate good times and bad, which is really important, probably more important than bad. So percentage of AUM, because you want them to get the business and then service the business. All right, we're about to get to one of my favorite topics, and this right here, being a master messenger, and at the end of this, is what will change your relationship in every single call that you do. I just want to make sure I'm getting, fund size question, another myth. Fund size, you can't do anything about it, right? It's like your height, right? He's 6'4", I'm 5'8". I can't do anything about it. I got to make do with what I have. If you have 3 million, 5 million, 10 million, that's what you've got. You got to still be making sales calls. RAs, discretionary, Tim, they can invest in anything.
They can invest in anything. Yep.
So size should not matter. It helps to be bigger, but like I said, right, just get bigger. You know what I mean? You just got to keep making the sales calls. And it's that relentless approach to direct sales that we believe in so strongly, and that's why hopefully this is coming across with a lot of passion and excitement. I love direct sales. Tim loves direct sales. It's the only way to win. And by the way, as I tell our sales team, when they finally meet you face to face, you're probably a great person and they're going to have a lot of fun. It's just when it's opaque behind this email wall, it's just a little weird. Okay, I'm going to get to some of these, but let's talk about being a master messenger. So we can't go into like normally what I would do in a Rainmaker class right now, but I do believe that, Tim, talk about the first. This is opening up the meeting. After you get the niceties or, hey, where would you like to direct the conversation? What would you like me to cover? Which typically everybody does.
Yeah.
The most important thing for you in a meeting, which is really, really critical, and this is how we've done it. You have to run the meeting as the sales/marketing person if you're with a PM. If you're not with a PM, it's not as important, but you definitely want to run the meeting. But let's talk about the first 15 to 20 questions that you need to have answered right out of the gate.
Yeah. First and foremost, do you allocate to this asset class?
Right. Okay. But no, what I mean is, let's just that's to close. Just
okay.
The first 50, you want to answer the first 15 to 20 questions that that allocator has in their mind.
Oh, what is what is your asset class? Where does it fit in my portfolio? Right? How should I expect it to perform?
Those are all questions they want answers to.
Yeah.
What's your AUM? Where are you based? How big's your team? What are your product structures? You need to come up with those answers in your opening remarks, because what that ends up doing is they have all these questions. Every allocator has 15 to 20 questions just as you're sitting there that they want answers to. Mm-hmm. And you have to be able to answer those questions, right? And we have this for you, so it's really, really important that you knock that out. Now, what Tim just got to, okay, which is really important, okay, is when you bring your story to life and then your hour's up, okay, what are the 2 questions you have to ask to close? And this is so important so you don't end up going back to the office and when your boss asks you or whomever asks you says, how was the meeting?
Yeah. And
you say, great meeting, right? We banned that term. You can't say great meeting at Dakota. You have to give the answer.
One, do they allocate to that asset class, yes or no? If no, bad meeting, waste of time, right? Second, and more importantly, is do you believe this will be an area of focus for an allocation over the next 9 to 12 months? That allows us as salespeople to report back to our team and the portfolio manager, this is active or not. If yes, right, we are going all out to make sure that we are part of that search.
So it's the quick no that you're looking for. And one of the biggest fans of Dakota, and I love him, Chris Greenwell, we had this conversation, and he did this thing. He called me and goes, "You're not going to believe this." I closed the meeting with that question, and I looked at the guy and I said, "Hey, would this ever be an asset class and a strategy you'd allocate to?" And it was a big California-based pension fund. The guy goes, "No way." He goes, "Way to this or that." And Chris is like, "Why'd you take the meeting?" He goes, "Oh, it just sounded so interesting." So my point is, right, but Chris, now ask those tough questions because it's the quick no that you're looking for, or you want clarity. Then when someone asks you, where do we stand? Oh, they're absolutely doing a search in the next 9 to 12 months, which is great. They allocate to the asset class. These are the 5 follow-ups that I need to get back to them on.
Yeah.
Right? Or they say, you know what, we're really happy with our large cap growth manager, Guy, but we really wanted to know the other alternatives that are out there if we were going to allocate. Now I'm not wasting time.
And
ask the tough questions.
Exactly. And you can also say to the analyst, look, I don't want to waste your time over the next 6 months. I'll keep you updated on our strategy and the performance, but do you believe this will be a fit for your portfolio? Yes or no, right? Put it about them is, I don't want to waste your time emailing you and calling you when I'm going to be back in town if it's really not a fit. If it's a fit and you think it's going to be something that's topical in the next 6 to 12 months, there we go.
Yeah. So question just came in on, do I bring a PM? When do I bring the PM into the conversation versus just the salesperson? So in my opinion as an emerging manager, my opinion as a salesperson, you, us, all of us as a pro, like we have to be able to carry the weight of the conversation, right? Mm-hmm. Now, the initial call, the initial meeting, doing it alone is perfect, right? Because you're going to, the due diligence analyst at an RAA or anywhere is not going to expect you to know what a PM knows, right? If it's a very big call and it's a key account or it's your anchor meeting in a city and you offer up the PM, you either can have them come or do a Zoom. We always like to do an initial call, generally. Go for it.
This is important. So when the PM says, I'm going to be in Pittsburgh meeting with 3 companies, can you fill in 2 other time slots? And you set up first-time meetings with pools of capital or an RA you've never talked to, highly recommend doing a pre-call with that RA before you have the PM go meet with them. If that RA does not allocate to your asset class and you have a PM in that meeting, that just does not feel good. But what that allows you to do prior to the meeting with the PM is we can bring it to life. We can say things about the PM they won't say about themselves, right? The passion that they have for the strategy, performance expectations. So that's where we can be on the front end sales aspect and really set the table. So then when we are in person with the PM and this allocator, the RAA, we can get much deeper into the strategy, into the story. Why do they buy certain stock or bond as an example, right? That's the grit that you want in the meeting. We can handle the upfront, it's not fluff, but the upfront about the firm, the philosophy and the process on that prep call.
Yeah, and then I always felt that I could say stuff about the PM, right? It's always been my philosophy without them in the room and really bring it to life. And then what ends up happening is the follow-up call. And now we can get a lot of leverage out of Zoom. But to me, it's all about the reps. It's all about getting the meetings with you or a PM. I do salespeople probably first or a prep call like Tim said. Then if there's interest and you think that something could really happen here, then that's when you loop in the PM. Yeah. So then you end up getting a lot of respect from the PM because you're bringing them in when it's much more of a warm lead.
Yeah.
And
one thing to build on this from an efficiency standpoint, you can use the PM excuse as travel, and then prior to the meeting say, sorry, unfortunately something came up, the PM is not going to be able to make it, I will still be there. Dial in the PM, or now all the offices have Zoom capability, have the PM Zoom in, and you be there in person. What allows is you get that before and after effect of the PM conversation where you can ask those direct questions as well.
Right, and another question just came in from someone that works at a bigger firm and said, do these same concepts apply to a product that might have a short track record and small AUM? and 100%, right? This is all about getting the reps, right? And then asking the right questions in the meetings, but it's all about getting face-to-face and then backing up to the city scheduling, right? Asking, right? That's all that matters. We literally have it, ASK, capital letters, got to be asking for what you want, which is meetings. And by the way, you wouldn't be asking for the meeting if you had a bad product, right? So you're actually going to introduce them, okay? Because questions come up a lot, Tim, that we didn't address on RAs are, there's a lot of people calling on RAs, should I? I'm just going to tell you, we have 360 RAs as clients, and they look to us, meaning us as salespeople in the industry, for new investment ideas.
Yep.
So it's very consistent. It's worth your time, but you just have to be consistent with it. Now, we're going to close, okay, with, again, the single greatest thing on the planet that you can be doing as an emerging manager. It's basically free. It's your best marketing, okay? And that's your quarterly conference call. It's just an example of Edgewood's cover. So here's the deal with a quarterly conference call. Number one, okay, when you do a quarterly conference call about what happened during the quarter, your ads, and your buys and sells, your detractors, your contributors, everything that happened within the portfolio during the quarter, your clients, okay, will end up taking that information and sending it to their clients. So you're number one, you're doing a huge favor, and it's very helpful because otherwise they have to call you and ask you and go through all of this. So it's very important that you're doing it because you're respecting your clients. It's also the greatest level of free marketing because what you're going to do is you're going to send 5 emails a quarter, right? You're going to have a save the date. You're going to have an invitation to join and register for the call. You're going to have another one. You'll have the day of. So you're going to send those emails, and it's going to be building your emerging manager brand. They're going to keep seeing the name of your company come through. And now you're not asking for a meeting. You're just saying, hey, this is our quarterly webinar. And one of the key things is you have to be very thoughtful. And you got to put on your marketing hat on the title and what you're going to cover, right? So it is an Edgewood quarterly update, but it's also nice to have something in there that is topical that you're going to be covering in addition to just the update. And we have an ebook on this that we'll email to everyone that was on this call. So you're seeing your brand 5 times a quarter, which is very important. Now, you script out the call. Okay, it has to be prepared remarks, just like you would a public company. And then what you do is the webinar goes, then you have Q&A to close it out because it's live, right? Mm-hmm. How cool is this? You get to follow up with the link to the call. You then transcribe the call, and then you send out the transcription with the actual replay. And then you do an abstract of the call. Vital, right? Because some people might be like, hey, listen, I don't want to read the whole thing. Just give me the high-level takeaways of what happened on the call. So doing the quarterly conference call, you create a ton of content. People do look at the content. We see people read the transcription versus actually watch, post-call. So, hey, I couldn't make it. Thanks for sending the replay and the transcription, right? Yeah. And so then you create all this content, and that content can go on your website. So, and it's all basically free. It's just your time and preparation. When you first do it, if you're having a tough time selling PMs, which, by the way, everybody has a tough time selling a PM when doing these, set the expectations at exactly 0 people showing up for your first call. 0. You're going to invite your whole database. Just assume no one's going to show up. What you should do is maybe get some friends in the industry or somebody to join. But we set expectations very low. But guess what ends up happening? If you do the call time after time after time, participation goes because you're going to add a lot of value. You're going to share some story about a stock in the portfolio, a private company if you're private equity, a real estate story, something you bought during the quarter. So it's illustrative of your investment process. Any other thoughts on the quarterly call?
Importantly, it's a great prospecting tool as well. It's not just for client. It is important client service component and its efficiency and scalability across your clients. But as Guy said, send it out to your database of contacts, and it's, in effect, free marketing to your prospects.
All right, 2 awesome questions just came in. Do these webinars need to be live or can they be pre-recorded? We do 2 live, 3 pre-recorded.
Yeah.
So you can do both. I love live because then you get the Q&A, but a lot of people just, they're nervous to go live, and so we pre-record, we edit it, and we get it out. Great question. Second question is, these popped in so fast. We currently write, this is a great question. We currently write a quarterly letter, okay? Should we also do a webinar, or would it be redundant? 100% do the webinar.
Yep.
Right, 100%. Our job as salespeople is to share value-added insights into what's going on in our end of the world, right? If you have a great quarterly letter, send that out, but also do your webinar and talk about what happened in the portfolio. And talk about stuff that isn't so obvious to the general public. You know what I mean? Because as I always said, somebody said value is doing so badly during COVID, I don't want to make any sales calls, but I was like, wait a second. You have PMs that have knowledge of small businesses and what they're going through, and they're talking to them all day long. Share those insights, share what's happening. That's really valuable. So as you can see, then what ends up happening, people dial in. It's like, man, every single time I dial into ABC's call, I learned something very valuable. 20 minutes, by the way.
Yeah.
20 minutes, prepared remarks, Q&A, and close it out. Because that's kind of the amount of time that you want.
And also allowing folks to consume your information in different ways, right? Video, audio, that abstract is crucial. The quarterly letter, right? Some like to read, some don't. Just being able to have it consumable in different ways is crucial.
And we start sending out, so email cadence when you send out the invites. When do the first Edgewood emails go out?
So we send it 2 weeks prior, 1 week prior, and then the day of. So the invite, again, an invite, join us today, and then the replay email goes out. So 4 emails for the Edgewood Quarterly
And
webinar.
if maybe ahead of that is to save the date a little bit before that, but 2 weeks out is absolutely perfect. Okay, so we're concluding here with what we believe is the single hardest thing to do as a salesperson, and that's the follow-up. And I don't necessarily mean the follow-up post-meeting. Most people are pretty good at that, sending a follow-up email and a thank you. The hardest thing to do is let's just say you follow our city scheduling program, get a ton of meetings. Tim, the weight of all those meetings that you've done, if it's not organized, results in what?
Time flies and you forget, and you lose information. You don't follow up with folks. You don't send the right information. 6 months go by, and you're like, wow, I forgot to talk to this person. That was actually a very solid meeting. You need a CRM to be tracking this. Right?
So 2 simple things, right? This is so important. This is the one key leverage point you have that you have as a salesperson. Getting your past meetings scheduled into your CRM so you can run past activity reports. And so within one click, you can see everybody that you've met with for the last 6, 9, 12 months. And your brain's going to tell you, oh man, I don't know where I got to follow up with them. I have to, oh, no, I'm good there. I'm good there. I'm good there.
The next slide, it'll show the next slide.
Oh, I'm sorry.
Yeah, you're good. This is the activity report.
So then you have a past activity report, right? This will show you everything that you've done. So all you have to do, I know it can be painful, but you just got to do it. Just enter the meeting, that you've done those days or that you've scheduled, and then it'll show up on a past activity report. This triggers sales actions and then leads to more and more, oh, you have to follow up with this person. Oh, you have to, gosh, I forgot I met with that person. We had a story back in the day when I was calling these guys out about Merrill Lynch. I'm like, when's the last time we met with such and such at Merrill Lynch? Like, oh, it was April. Oh, we met with them in November, right? It was April 16, okay? Oh, we met with them in November, okay, of 15. And I was like, that doesn't smell right. Check the database. We checked the database, it was November of 14, okay? So it was a year and a half went by, okay? Because as Tim said, time flies. This should be basically your Bible. It's our Bible looking at the past activity, and then what action should you be taking? And of course, you're going to have this in your opportunity pipeline, but it's going to be absolutely vital to have this, enter the meetings that you've done, and then use your past activity report, right, to make sure you're current with all those meetings that you've done. Because if you're really good at setting up meetings, if you're not highly organized, the weight of all those meetings is going to crush you, right? Because you're not going to have it in a place that's easily accessible when you're on the road, on your laptop, wherever it is. If you do this in your CRM, you're good as gold. Wonderful. So, okay, we got another question. This is the most questions we've ever had, which is awesome. Yes, we will definitely be sending out the notes from this call. You absolutely send up a thank you note. And what you should do, this is, someone just asked a question, it's a super question. Basically, if there's no immediate deliverable after the meeting, do you send a thank you note or do you use a thank you or a chaser later? What I think you should do is always have something that you didn't have in the meeting, so you have a reason to send them something.
Yeah.
Right?
So no deliverable, I wouldn't necessarily agree with. Your deliverable, if there's no send me this or something like that, your deliverable is a email recapping what was talked about in the meeting, right? If we expect that analyst is going to take a 45-minute to an hour-long conversation on their notebook and capture everything that we said, we're going to fail, right? So in your follow-up emails, thank you for taking the time. It was a pleasure meeting you. Look forward to continuing the conversation. As a brief reminder, here's who we are, what we do, how we do it. I know you asked about this. Here's the answer to it again, right? Put that in an email. You're effectively helping them do their job, and we're not relying on them to capture everything in that meeting. So you always have a deliverable after that meeting recapping what was talked about.
Yep. Now, that said, what software tools do you recommend? So we naturally would use Salesforce as a CRM, but there's a lot of other, we'll send out a blog that we've done on the top CRMs for investment firms. We love Salesforce. We use Splash for event registration, really great platform, so Splash. And then we obviously, we used to use Zoom, but for the Edgewood webinar, we
still use Zoom.
Yeah, we use Zoom for the Edgewood webinar. We still use Zoom for Dakota Live, but we also use another little more sophisticated platform. So it's those. Salesforce, Splash is awesome, okay? MailChimp for, if you wanted a really good, affordable email platform would be MailChimp, and Zoom for the webinars.
Yeah, and then also for email marketing, Pardot integrates with Salesforce. Salesforce owns it. That's a good one that we use as well.
Another question is, what do you recommend? Personal thank you notes, 100%, great idea, and absolutely send swag. Everyone loves getting swag. So yes, I love that question. We'll send everything out, and I think, Tim, so this has been extraordinary. So just to kind of wrap, the key themes, like you have to be doing more with less, right? What we were trying to tell you today is you can get a lot done without spending a lot of money. It just takes effort, right? Fundraising, as you know, is a manual game, right? Sales is manual. The only shortcut in sales, okay, the only shortcut in fundraising is sales process. And we went through, this has been our entire sales process. And I'm just telling you, it's worked in investment sales, it's raised a lot of money, it's built tons of relationships, it's worked in software sales. This process really works, but it takes a lot of discipline, a lot of hard work. So everyone, thank you so much for joining. Our next episode will be on October 11th, and we're going to cover consultants. So emerging managers, all about the consultants, how to penetrate them, how to approach them, what your expectations should be, and all of the emerging manager programs at the consulting firms and the public plans. And with that, we'll sign off. Thanks so much for joining. And thanks, Tim.
Thank you.
Hello, everyone. I just wanted to say thank you for watching the Emerging Manager Growth Show. I hope you got a lot of value. And I think, as you know, we shared an enormous amount of information about metro areas and other type of information, RIAs, etc. All of that information exists in Dakota Marketplace. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.